From Connecticut's newsroom. Now, Fox Connecticut Morning News.
The current economic mess is affecting millions of American families, so today we have some friendly financial tips for America's families out there. Money doctor and the author of The Financial Physician, Louis Scatigna, is here. You also have a radio show that's very popular. Louis, good to see you. Thanks for coming in.
Thanks for having me.
Want to start first off by telling us, what's wrong just in general with the way that Americans spend money and our whole financial outlook?
Oh boy, we lost our way the last 30 years. Now, the last 30 years have been the most prosperous time in America's history, actually in human history, and we lived with brand new houses, brand new cars, bigger houses, debt. Right. That's the whole thing. It was we borrowed to do it. So America's in such high levels of debt that we can't survive this economic downturn. So we have to change the way we think about money, how we spend money, and how we utilize debt.
How do we change the way we think about money, for example? What do we do?
Well, first of all, we have to spend what we have and not spend more than we earn. And that's what credit cards do to us. So it enables us to spend more than we're earning. We got to stop buying new cars, buy used cars, buy houses at a reasonable size. You know, in the 1950s, the average size of a house was 950 square feet. Now it's almost 3,000 square feet. Right. And the families are smaller.
It's amazing, isn't it? Yeah, the closets were smaller back then, and the rooms were smaller, but everybody seemed to get by just fine.
Hey, I was the oldest of 6 kids. We had 1 bathroom in a small house, and we were happy. We had the same car for 14 years.
Unbelievable.
Right? So we have to go back to the values of our grandparents. You know, spend what we have, save up money if we want to buy something, buy what we need, not what we want.
A lot of people have debt. What do they need to do about what they already have?
Well, stop spending what you don't have and attack the debt, especially the worst debt, which is credit card debt. I call credit card debt cancer to the financial body. It's the worst debt we can have. Pay off that credit card debt. Stop spending money that you don't need to spend. Attack your credit card debt. Cut them up. Keep one for emergencies.
And it's a good idea to actually use the credit card for, say, small things sparingly, right? Because you want to have some credit and you want to have good credit.
Yes, use the credit card once in a while, but pay it off each month so you don't pay those outrageous interest rates.
What are some of the questions you get on your radio show, some of the common questions that generally a lot of people have problems with?
Well, what do I do with my 401k? I'm down 30, 40%. I'm going to retire in 5 years. What do I do? Well, you have to understand that the market has risk, and a lot of us learned that the last few years. Bring the risk down. Don't have all your money in stock-oriented investments. Be a little bit more conservative, especially as you're approaching retirement or if you need that money for college or to buy a house.
What are some of the investments that you like? Do you like the stock market? Do you like bonds? Do you like real estate? I
hate the stock market. I think the stock market's headed for another big downturn. The economy has not improved. What I do like is tangible assets like gold. I mean, gold's gone up 400% in the last 10 years.
No kidding.
The stock market hasn't. Why? Because the U.S. dollar is depreciating. We're printing dollars like mad. We have huge deficits in this country. I think gold and silver is a good place to be.
Over the long term, the stock market generally outperforms lots of other things, though, right? It's still not your choice, though.
Not now, because I think the economy still has another leg down.
Okay. What else? Any other last advice for people who want to try to save their money and do
bottom line is buy used cars instead of new ones.
Okay, that's the number one thing.
That's the number one thing, because a lot of families have $800, $900 a month in car payments. Buy a car that's a couple of years old. You'll buy it for 60% of what a new car goes for, and it'll last forever.
Louis Scatigna. Did I get it right?
Right.
All right, Louis, thanks. The Financial Physician in bookstores. You can get it anywhere?
Yeah, and Amazon.com.
Okay, perfect. Thanks, Louis. Appreciate you coming in.